Good morning, Mike and Corey here on today, October 30th, just before Halloween, but even more important, coming right up on an election. Already seen some volatility in the markets this morning with things were down, but they're back up again. So that's great news. We're going to cover some exciting news that came out. Google, one of our core holdings, had some great earnings. Eli Lilly, not one of our core holdings, had some disappointing earnings, and the GDP number coming out a little less than expected. And then Corey's going to dive into CAT, which is those big vehicles you see up and down the roads doing construction. You just get to sit and watch those.
There's a
But
lot of that
before
in Texas, Mike. A
a lot
lot
in
of
a lot in Texas. I always
always.
I always think I want to drive one of those things. That looks like a lot of fun. They're like powerful vehicles. So,
Oh,
but
all the both of my kids, they would love that. I don't know that the Earth would love that or anyone else around them, but they would.
well, before you run off and take all of our investing advice, I will remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me come up with exciting news. Now, I'm not going to test it right now, but most of the time when you open up a browser and you put G, you get Google. So, and there's a reason why earnings are so good and this company is so valuable is if it is your default search engine, which it is for me. I used to use, I want to say Yahoo years and years and years ago. But Google is what we use. And what Google does is it scrapes the entire web for information and feeds you back. But here's how they make their money. They're not making money, quote unquote, off you. They're not charging you to do something, but every business, things that they feed you, they are charging them per clicks and things like that. And obviously they've divested into some other ways to make money. They came out with earnings today and had a big beat, mainly on cloud revenue. So their cloud up 35% from last year. And so when 35%, you need to have a perspective. It went from 8.4 billion to 11.35 billion. That's billions. That's a lot of money. So their stock accordingly jumped up. It's up over 6%. And just to let you know, this is one of our holdings within our models across most of the, I would say, moderate to aggressive accounts. So you likely have a percentage there. You might have a direct holding in Google. So we love when this comes out. Just keep in mind, though, that these quarterly numbers are like report cards to say, yes, you are on your way to keep doing well. So, good news on Google, more big earnings coming out this week. Microsoft and Meta are coming out later today, and then Apple and Amazon tomorrow. So lots of exciting news, 5 of the big 7. And here, I'll just show you Google's chart. I'm bringing up a year-to-date chart so you can see kind of the ride that we have with this position. It's not, when you look at this on a year-to-date basis, it's not a straight ride up. In fact, the stock actually peaked in July. You'd be like, wow, it's really up in July. Hasn't reached those all-time highs again yet. In fact, it's sold off 30%. Which always provides a nice buying opportunity. So anyways, just wanted to kind of show you what this looks behind the scenes. If we look at like a 5-year chart or, it starts to look more like straight up if you look at years and years. So let me go to, when we do quarterly reports, sometimes companies miss what's expected. So Eli Lilly, which I would argue, if we move beyond the Mag 7, the big tech stocks, and we said, let's grab the top 10, Eli Lilly would definitely be in my top 10, although this is not a holding, a direct holding that we have in our models. They missed earnings and slashed their profits. And what did this do to their stock? It dropped 10%. Earlier this morning, it was off as much as 13%. Obviously, the business model is phenomenal. You develop drugs that people need. Pharmaceuticals, their biggest one has to do with weight loss. Everybody needs to lose some weight. But anyways, they miss their earnings. So we'll continue to monitor it. It's not at this point yet where I'd be like, ooh, we could buy this. I mean, you definitely could buy it on sale from yesterday. It's 10% off, but it's not where I'm ready to plug in and dive into this stock. One of the reasons why, for my thesis on that, is they are mainly reimbursed by health insurance companies, which have a lot of reimbursement from either employers or the government. So they can't just charge whatever they want and get it. So that would be a reason. Okay, and other piece of, this is the good news is bad news is good news. The economy grew at a 2.8% pace in the third quarter. Hey, at least it grew. That's good news. But it was less than they expected. So while that sounds, and that is bad news, we don't want the economy. We want the economy to grow, certainly expected and better. But what that means is the economy is slowing, and therefore the Fed likely can, reduce interest rates to be less restrictive. So it's the bad news is good news. This is bad news. We want the economy to do well. The good news is the Fed will reduce rates, which the stock market always likes. So with that, I will turn it over to Corey, and he can let us experience driving a big cat.
Thanks, Mike. Yeah, just wanted to highlight a company that is very important to the economy and kind of some of those underlying things taking place in the economy. So first, just want to highlight, if you haven't seen it, CAT has experienced quite a bit of capital appreciation in that stock price in recent years, more so than normal. This is a high quality company that is run well. They just don't typically grow super fast. So it's a good diversifier in a portfolio, not necessarily something where you're kind of trying to outperform the market or something like that. But with this capital appreciation, a lot of that has come from valuation expansion. So it's not necessarily that their earnings are pushing the stock higher. It's kind of just the market pushing the stock higher. And we have heard in the finance world, there's been so much talk about infrastructure spend and private infrastructure spend and all these infrastructure funds. And Caterpillar is a beneficiary of that, but not to the extent that, we should just expand their valuation multiples for no reason. Well, they had earnings today, and I was kind of surprised to see that revenues were down 4% year over year. And if we I kind of scrolled through the report to try to give you a little something to look at. Here we have sales by geographic region. There was no geographic region with increased sales in the quarter, year over year. So interesting to note. And the stock price wasn't down very much today. We saw that it's trading at sort of an elevated valuation multiple. It's experienced quite a bit of capital appreciation, and the stock was hanging in there. So, it is a quality company, and those quality companies do deserve some premium valuations at times. But I wouldn't be surprised if you've seen kind of some pull forward there of capital appreciation and possibly a slower period ahead there, in the near term future. But anyway, all interesting.
Yeah. I mean, when I think of Caterpillar, I mean, I'm always thinking, moving dirt, building bridges, building foundations for buildings. So when you're building that infrastructure, I think Caterpillar is a big beneficiary of that. Of course, in today's world, there's a lot more being built in the virtual world, which seems kind of funny to say when you say like Meta, whose earnings are coming out later today. I mean, they're not moving dirt, they're moving things in electronic land.
Moving
And yet,
data for sure.
yeah, they're moving data, information all over the place. So, a Caterpillar, and I remember when, whatever it was, 5 years ago, hey, let's have shovel, or maybe I was 15 years ago, the shovel ready projects. Like, I want to have shovel ready projects. If the government says here's $100 million, are we ready to start working tomorrow to spend that money in a productive way? I think Caterpillar is a primary beneficiary of that. Um, with the current elections and the discussion, I guess, bridges are getting older. We're starting to see our infrastructure get older. I do not hear a lot of emphasis on let's let's get all this country built up from either party. I don't hear that spend, but of course we'll see later on. With who actually is elected next week. So,
Mike, I
but
think they approved like over $1 trillion in infrastructure spend. Was that the Inflation Reduction Act, or I don't? It was
yeah,
one of those, which is kind of weird. You reduce inflation by more spend, I guess. Okay, but but I think there is a lot of that hasn't been spent yet. It's earmarked but not spent, and so people might be kind of looking at the pipeline of those projects and saying, maybe Caterpillar missed this time, but they've got a lot of pent up demand in the foreseeable future that they'll be fine. Maybe I
well,
could see
well,
that.
well, I think that act came out a couple of years ago. So if it's still not being spent, it's kind of like, oh, that's not shovel ready. That's not
No,
shovel.
that's for sure. You're right
And,
there.
and of course you do want to spend your money wisely. You don't want to just rush out and spend it like sometimes my kids they get their paycheck and it's like I can tell when they get their paycheck because there's a surge of DoorDash and McDonald's around the house. So we don't want the government to do that. But anyways, we'll keep our eyes on
Hey, at
Caterpillar.
least your kids aren't spending it before they make it. And I don't know if we can say as much about the government.
Yeah, well, that'll be a discussion. I'm sure we'll have that on the show one of these days. So, anyways, thanks everybody. Stay tuned. Tomorrow we'll be coming out with Meta and Microsoft earnings. It's very difficult. The question is, do you put your money into Meta or Microsoft today? You're basically betting on the earnings, or not betting, but I mean, great companies, but you see like in Eli Lilly, great company. And if you were said yesterday, boy, I love Eli Lilly, they're doing great things, I'm putting my money in, and you're down 10% today, it's kind of a sick feeling. Not many people want to stomach a 1 day 10% loss. So very, very cautious when companies are coming out with earnings. Obviously, if you did this with Google yesterday and you're up 6%, you're like, oh, that worked out great. But we don't always know, and we don't have any inside knowledge to know whether they're going to fork. A lot of times it's based on the forecast for next year, things like that. So, when we love a company, Microsoft, Meta, Google, Apple, and they come out with a quarterly scorecard that brings their stock down 5%, I love that as buying opportunity. Unless they release something that really concerns me, I'm like, yeah, let's get it. It's on sale. Because over the long-term trend, it'll likely be up. But stay tuned. We'll talk to y'all tomorrow. Bye.